Bill, well, very nice to meet you in person. I know we spoke on the phone at the time of the IPO, but I know an awful lot has happened at New World since then. So it would be very helpful for me if you briefly run down the status of the different projects.
Okay, we have 3 projects. The first one starting in Belize, the Blue Creek project. It's a farm out where we agreed with the farmer a multi-stage work program which earns us up to 100% working interest. We've completed the first two stages of this work program. We're at 25% working interest today. The actual farm out agreement entitles us to earn into 100% working interest. That will require, from where we sit today, completion of what we call the Phase 4 seismic program, followed by the drilling of our obligation wells. Each obligation well requires an election to drill. We've recently had a modification to our farm out agreement there whereby we're not required to drill 2 wells through the Jurassic into what we call the Base Margaret Creek. Basically, those were 11,300 foot wells. We've now agreed to modify that to 3 base Y2 mid-Cretaceous wells, which is about 5,500 feet. The idea being that what we wanted to do is we wanted to get into early oil. In other words, should we be filled to the base Y2 Cretaceous interval, that we would shut down and be able to put the well on test and begin to produce and get on cash flow early. 3 wells down to the Y2 equal about 78%, 75% of the cost of 2 Margaret Creek wells through the Jurassic. So basically what we've done is we've reduced our CapEx requirement from $20 million for 2 11,300 foot wells to about 14.75 for 3 base Y2 mid-Cretaceous wells. There's also an obligation to drill a 4th well out of cash flow through the Jurassic to the 11,300 foot interval, and that'll be drilled and completed rather through the generation of cash flow from the first 3 wells. The other 2 projects are Danica Jutland and Danica Resources. Danica Jutland is also a farm out where we're entitled through the completion of a multi-phase work program to earn up to 80% working interest. The farmer reverts to a 5% override, just like in Belize. There's a 20% paying partner in Denmark. That's the Danish North Sea Fund. That's a entity, if you will, of the Danish government. We've completed our Phase 1 seismic there. Phenomenal results. We've uncovered at this stage 3 prospects that we've got the government to agree for us to proceed into a Phase 2 seismic program where we'll conduct 2D over to what we call Triassic plays. These plays have a very pronounced gas response to the AVO modeling we've done of our seismic, which is AVO is more or less a direct hydrocarbon indicator. And we're very excited about that. The 3rd prospect is a deeper carbonate prospect in the Zechstein. The Zechstein is one of the primary producing intervals in the North Sea and the Baltic Sea and the Danish area of the southern sector of the North Sea and whatnot. So it's a very common producing interval within what's called the Permian Basin. Danica Resources, our 3rd project, it's a huge area. It's 1.67 million acres. When you add up Danica Jutland and Danica Resources, we are by far the largest license holder in Denmark.
And this is conventional or is it unconventional?
It's all conventional seismic operations and drilling. We're not doing anything tricky, no black box technology. But on Danica Resources, one of the things that's interesting to mention is it comes with a drill-ready prospect. It comes with a Zechstein Rodligen prospect on the western side of the block. Basically, the block is set up by a producing Zechstein Rodligen fairway, which begins in Poland, goes through Germany, all the way across the Baltic Sea, and then kind of terminates just along the the southern margin of the northern Permian out in western Denmark, and then picks up again and runs to the northwest out into the North Sea. There are multiple producing accumulations up and down this fairway. We stumbled across it, you know, after reprocessing seismic and looking at it and then reviewing it with the CP, and are very excited because this prospect we call the Owls prospect on the P50 scale, it represents about 1.4 TCF recoverable and just under 100 million barrels of oil. So the potential there is just amazing.
Yeah, that's something I wanted to ask you about actually. If we looked across the whole portfolio, how would you estimate the potential at the moment from the work you've done so far?
Well, the work we've done so far is we've completed 4 phases of seismic in Belize, 1 phase of seismic in Jutland, and we've just been named as operator in Danica Resources in the Baltic region, and we've not undertaken any seismic operations in the field yet there. We've only looked at pre-existing data, reprocessed data, and have used that to establish the design parameters for our upcoming seismic program there, which will be starting in a matter of 3-4 weeks. Really, the results are to date are a little bit over 730 million barrel oil equivalent in the prospective resource category, broken down to 396 million barrels of oil and just above 2 TCF of gas. Mm-hmm. We've uncovered tremendous potential. Keep in mind, we went into Belize thinking that, you know, as a small company, newly listed, we're going to have a lot of trouble going out and competing with the big guys. I can tell you that from years of working for the big guys. And in other words, if ExxonMobil or BP or Occidental, if they want a project, they're going to get it, unless they're competing with each other. And so we began to look at, well, at the time, at $100 oil, what are they targeting? You know, how big is their elephant? And how much confidence we have in oil price, and maybe we can adjust the size of that elephant, which would help eliminate part of that competition. This is part of the reason why we became attracted to Belize. The Petén Basin, which is really up in northwest Guatemala, has sourced tens of billions of barrels all around the margin of the basin. And it's underexplored primarily in Belize because of the complex nature of the tectonic geology, the faulting and whatnot out there. It's an area where you see a number of plates colliding, where you see a number of complex fault systems. Mm-hmm. And as such, over time has produced more or less results which represent smaller accumulations. For example, there's a producing field right next to us which is only a 25 million barrel field. But, you know, we looked at it and we said, well, you know, 25 million barrels producing at 5,000 barrels a day on a reasonable decline with reasonable cost and a reasonable capex. That represents a PV10 value of about $2.5 billion. A wonderful starter kit for a company like New World, yeah. Where if we can enter into that without the onset of significant competition.
So are you saying that these are too small for the likes of Exxon then? They're not interested in something 25 million
Yeah, I think the
barrels
size of their elephant, I certainly can't speak for them, but I think the size of their elephant is considerably larger than us.
Okay. And so you talked about the tectonic faulting of the play. I mean, is that going to make life a lot trickier in terms of the seismic work and the drilling work?
Well, the tectonic activity out here in Belize, which results in complex faulting and hard to understand trap mechanisms, has presented a big challenge. This is why you've seen us go through 4 phases of seismic in Belize. You know, phase 1, let's get a regional look of what we have out here and begin to build a play concept. Phase 2, after we identified it after phase 1, 4 plays, which were not quite prospects at that point, we began to zero in with a higher density seismic grid over that, which began to uncover the mystery of trap. Phase 3, we came in with yet an even higher density seismic program, which helped us understand trap mechanism even more. And what we learned from phase 3 is that the trap geometry that we see in Blue Creek and West Gallon Jug, which was interpreted, looks very, very similar to that of the trap geometry from the producing closures, which B&E, our neighbor, produces from in Spanish Lookout. Mm-hmm. So it's fair to assume, if you're in close proximity to a producing field and you have similar looking trap geometry on seismic, because we sit effectively between the source rock and the producing field, that there was active migration between the two, mm-hmm. right? So migration, the evidence of on seismic of a large evaporite seal in the region, which prevents migration from moving off, suggests to us we need to answer the question regarding trap. And then by applying multiple phases of seismic with a seismic program designed for greater or enhanced resolution, we closed in on a better understanding of trap geometry, which has been the result really in a 60% reduction in geologic risk from phase 1 to where we're at today.
Okay, but would you say that trap is your biggest concern?
Absolutely, without question, trap is the largest concern, because you don't have as much. Well, you have concerns here. Part of your concerns are trap geometry itself, but another part of your concern is how the trap was formed over time. I'll kind of animate it for you. Were the traps formed prior to active migration? And as such, you have an accumulation. Or were the traps formed during migration, and when migration hit the area where the trap is, it had leaking fault planes and juxtaposed throw of permeable reservoir to permeable reservoir, and you have shallow spill points and leaking points which cause a limited accumulation? Or were the traps formed well after migration, and all you have left is residual oil? I'm afraid to tell you, with all the technology out there, you're not going to answer those questions until you pick up a rig and have a look at the drill bit.